Hello guys and welcome for this short video. I would like to present to you and to let you know about the key levels to watch this coming week regarding the SPY index, which is the ETF that replicates the SP 500 index, which is the largest and the most important index in the world. So let's have a look on the charts. This is the daily charts for the SPY. The SPY formed on last Friday, a very interesting pattern called the doji. The doji is a hesitation pattern where we will have a close and the open near to each other. So you can find here, in fact, the levels when I select the candle. So here we'll find O, which is the open 389, and C 389, which is also the close. So here we have a market in balance. Bulls and bears have the same strength. So here we should watch two main levels. Anything above the highest of the day, which is 392, will be considered as a positive signal. Here the bulls will take the lead and we will see the SPY going up. Anything below the low level of Friday's candle will be considered as a bearish signal. So here, if the market breaks out this level 392, and especially not just breaks out, but we need to see some candles trading above this level to confirm the recovery and to confirm the signal. The next target will be the almost 400, which is the highest ever. Then if broken out, we will see a new high record, which will be the 410. So anything above 392 will be considered as a buy signal to reach first the 400 or 399 level. This is the first target, and the second target, which will be the 410. But here we will see that the market is challenging the moving average 20, which is flat and started to turn a little bit down. Here we have another major support, which is the moving average 50. This will be my tip to buy. If this level, the 385, is broken down, we will see the market drop to 372. So here, guys, keep in mind, we have two levels to watch. 392, above this level, we are bullish. Below the 385, below the SMA, the simple moving average 50, we are bearish. The target for the upside will be 400, then 410. The target for the downside will be 372. Now, what will be the catalysts or the market movers to watch this week? First, we'll have the 10 years government bonds yield trading at a not a historical, let's say, but a recent high, since we didn't see these levels since month, and especially the move, the US 10 years government bond yields went up so quickly. So now in weekly basis, you can see that we are near the 2% level, which is a key and high watched level from all the investment banks. And of course, you know that the 10 years yield is related to the inflation. And you can see here, technically, the RSI is overbought in weekly basis and started to form this divergence, started to turn flat. So any drop, any consolidation from this 10 years government bond yield will be a positive catalyst for stocks, especially for technology sector. Then we should watch this week three main events and market movers. You can see Yes, we can have the existing home sales on Monday, but it's not what will drive the market. What will really drive the market is the speech from the Federal Reserve president of the Federal Reserve, Jerome Powell. Any word he will say, any word he will pronounce about inflation will have an impact in markets. He was so dovish during the last FOMC meeting, and after that we saw the yields just going up. So the President Powell is expected to calm down the market. So we'll see how the markets will behave and will react according to each word spoken by Jerome Powell. Then on Thursday, we have the GDP, which is the growth in domestic product. So here the growth of the US economy expected at 4.1%. So here we'll see how the market will absorb this data, especially related to the inflation. So if we have two cases, high GDP, so if we beat the GDP beats the forecast, something above 4.1%, will confirm the expected inflation, or a bad news, anything below the 4.1% can be a negative catalyst, and a catalyst that may slow down the inflation. Then the initial jobless claims. So as you know, the Federal Reserve has two mandates: inflation rates and the jobless the employment rate. So these three events, the speech of Jerome Powell, the GDP, and the initial jobless, will be the market movers for this week. Thank you guys, and wish you a very good day.